Okay, we got a fun video scheduled for today. We're going to be looking historically over the past decade at the best performing investments. So, lots of data to geek out over, and hopefully, we're going to learn something. That's usually what happens when you look at a lot of data. And hopefully, we can gain some perspective because with investing, sometimes you develop tunnel vision, right? You get stuck evaluating different assets. It's called paralysis by analysis, right? Is Jeppy a little bit better than Divo? Is Apple better than Microsoft? And it's important every now and again to just zoom out, look at some of the overarching trends, and keep it simple. So let's jump right into it. This first article is the top 10 performing ETFs of the past decade. We can come down here, and right off the bat, they say the S&P 500 over the past 10 years gained 267.8%. Extremely impressive. The Dow Jones was similar at 235%, and the QQQ, the large cap tech heavy index, 527% return as of December 2020. So that's kind of a reference. Now, if we scroll down, we can see the best performing ETFs over this past decade. And the first one is by iShares, and it's a semiconductor ETF, ticker SOXX, and it's up 663% in the past decade. They have a little blurb down here that says rising consumer spending on technology and a 5G boom, expectations of higher smartphone sales, the announcement of the Phase 1 US China trade deal, and the coronavirus induced social distancing propelled the tech and semiconductor space. So, tech did extremely well over the past 10 years, and semiconductors in particular, because of all these factors, did the best. I mean, up 663%. That is extremely impressive. Now, the next one, the second best performing, was up 593%, and this is biotech. Mergers and acquisitions, positive drug data, and FDA approvals were the key catalysts for the space. I'm no expert in biotech, but I can definitely see why this outperformed, and I definitely see potential for this to continue to outperform into the future, especially as technology goes into the healthcare sector. We can see that with the new mRNA vaccines. That's very interesting technology that's going on there, and it's really just the beginning. So, this is a field I'm super bullish on. The next one is a general kind of internet ETF. It's up 532%, and it's ticker PNQI. And if I speed up a little bit, the next one is that QQQ, which is tech heavy large cap. The one after that is the Vanguard Information Technology, VGT, yet another tech ETF that focuses a lot on information technology. And then down here we have small cap, which did a modest 505%. And then following that, we have more medical and healthcare technology. So, if there's a takeaway from this, we can see technology and healthcare, where technology is being implemented, is really doing fantastic. And of course, semiconductors was the single biggest thing because everything is reliant on semiconductors in the technology space. It's kind of the industrial sector of technology. Now let's change gears to individual stocks. So, which companies themselves did the best over the same past 10 years? And this infographic is really useful for seeing this. So, this is how much would investing $1,000 10 years ago be worth today. And it's from 2009 to 2019, so it's that decade. So the number one name here is Netflix. If you put in $1,000 10 years ago, or technically almost 12 years ago now because it's from 2009, you would have $49,000. Followed by Amazon, Apple, United Health Group, another healthcare name. We even see some brands like Nike, more tech names, Microsoft, and Google. And some surprising ones, if we come down the list a little bit, we have Intel. We even have Walmart, Coca-Cola, Johnson & Johnson. So the trend here is, again, lots of technology companies outperforming. So essentially any company that can utilize a new technology or develop a new technology and implement it in the market to make an existing process better has done very well. Netflix, of course, is a prime example of that. Before Netflix, you had to get DVDs if you wanted to be entertained. So they used technology to improve people's lives in the form of comfort and entertainment. It doesn't always have to be healthcare and curing cancer. It can be simple things, and the value that is created is evident in the market. Now, there is one more asset I want to talk about in this video, and this is the single best performing asset over the past decade and has the potential to be the best performing asset over the next decade easily in my opinion. And it makes the returns of Netflix look like a drop in the bucket. And this is no other than Bitcoin. Bitcoin is officially the best performing asset of the 2010s. Now, allow me to go through just a few bits in this article, mostly these comparisons, because I think this did a great job putting it into perspective. So they compare a $100 investment into various different assets. And the first one is just holding $100 over the previous decade. So you would have had, obviously, $100 10 years ago, and today they only had the buying power of $85.96 due to inflation. So this is why you definitely want to put your money to work and acquire ownership in assets. What about oil? That's pretty crucial to modern society. And if you put $100 in oil 10 years ago, it'll now be worth only $74 for a loss of 26%. If you put $100 in gold, you now have $134 a decade later, so a gain of 34%. If you bought a 30-year US Treasury bond, you would now have $208 for a return of 108%. So getting better. Now, this is a similar list of the top 10 performing stocks in the past decade, but the list is pretty similar, and Netflix is still by far the best investment, turning $100 into $4,277 over the past 10 years. But even Netflix's stellar returns, which have been stellar, are totally dwarfed by Bitcoin's gains. If you put that same $100 into Bitcoin in 2010, it'll now be worth close to $9 million. Now, of course, I don't think you're going to get amazing returns like this in the future with Bitcoin, but the potential to continue to outperform the market over the next decade is definitely there. And the reason why I say that is because if we come back to the best performing stocks over the past decade, you're going to notice a few trends. One is that most of them are technology stocks. And what these companies do is they take a new emerging technology, sometimes they develop it themselves, and they implement it into the market in some useful, productive way that improves people's lives. I do want to inject that you don't always need to be curing cancer or inventing nanobots to fight every disease. Even simple things like using technology to make people's lives more entertaining and convenient is heavily rewarded in the economy. And to me, Bitcoin and cryptocurrency is exactly that. It's a technology that has the potential to improve people's lives around the globe in a very significant way, offering a decentralized way to access their finances and have different financial products that they otherwise wouldn't have. It's just a different beast because there's no central organization or company controlling it. It's a decentralized platform. It's a technology that anybody can use and benefit from. And there's tons of projects or platforms like Ethereum that then take that blockchain technology and turn it into useful things. And as we see, when you can take a new technology and implement it into society to improve people's lives, it is heavily rewarded. Now, I want to take a look at this chart. Feel free to pause the video and comb over this, but let's look at it together for a little bit. So this looks at the best asset classes over the past 10 years. And here is the total return over the 10 years, and this is the return annualized over the same period. As well as down here, we have rows that show the highest return for that year and the lowest return. QQQ, the large cap technology focused ETF, is one of the better performing ETFs on the market. And that just reiterates what we were talking about on how companies that can take or develop new technology and implement it in the market to improve things tend to do well over time. And something else I want to note is that large cap companies outperformed small cap companies over the past 10 years. Not by a lot, but by a small margin. And usually people invest in small cap companies because they have higher upside potential. But that's not always the case. But of course, the main point of this chart is to show the returns of Bitcoin, even benchmarked against QQQ that went up 540%. If you look at this number annualized over the 10 years, QQQ went up 20% per year, but Bitcoin went up 230% annualized over the past decade. So to me, what this says is that Bitcoin and just crypto in general really does have utility behind its technology. Otherwise, it wouldn't be appreciating like this. And that data is why I personally invest in crypto. This is my portfolio. I don't show it that much because I don't want to be a crypto channel. They kind of have a bad rap. I will leave a crypto channel below that I watch and I think is very useful. And he talks about a lot of the data and the overarching cycles in the market. And I find it to be very useful. So those are the main points. Hopefully, we got some kind of a takeaway from looking at all this data. And I think it's pretty clear that disruptive technology implemented in a way that benefits people's lives is where most of the growth happens. But definitely let me know what your takeaways in the comments down below. Leave a like, subscribe to the channel if you're still watching and enjoyed, and I will see you in the next one.